can you give us a couple of real life examples of SSAS at work? Yes, absolutely. Certainly had a couple of cases not too long ago which turned out absolutely fantastically. Firm of chartered accountants realised that their client had a commercial property on the balance sheet, and the accountants also realised that they hadn't really been making use of their pension contributions for a number of years, which I have to say is not an uncommon position with many directors in companies. So they brought the directors in to see us, and obviously we had a nice long chat. What we did is we explained we could set up the SSAS. The company would then make contributions for both of the directors. The property that the company had bought luckily was very cheap in terms of commercial property. It was only worth $200,000. Held on the balance sheet of the company, so therefore actually exposed to creditors as well. So that was something else they were keen to mitigate. So what we did is we set up the SSAS for them. The company arranged to make £200,000 contributions, which were allocated to both of the directors because they had current and previous year allowances available, which was very handy. Once the funds were held in the SSAS, we then arranged, obviously, a valuation for a solicitor to handle the conveyance. And the SSAS actually arranged to purchase the property off the company. So it was a very interesting flow of cash. So the company had paid in £200,000 to the SSAS, which attracted £50,000 worth of corporation tax deduction, which was obviously very attractive indeed. We then used the SSAS to purchase the property off the company. So in effect, the £200,000 flowed back to the company and back onto the balance sheet. So in terms of the cash flow for the company, they weren't out of the funds for too long, and having achieved a tax deduction en route, which obviously they were extremely pleased about. But of course, in addition, we now had to have a lease agreement between the SSAS and the company. So we set up the lease. The company then had to pay rent to the SSAS, and I believe the rent was £20,000 a year. Again, this gave the company another tax deductible expense to reduce their profits. So again, they were saving 25% of the annual rent, which I think was £20,000. That £20,000 was now coming into their SSAS, gross, no tax. And you can see on a £200,000 contribution with £20,000 coming in, that's a 10% return on the capital invested. So that's a very healthy return for your SSAS. So if they did nothing else, and we assumed, say, no growth in the SSAS over the next 10 years, or say no more contributions, then you would have a £200,000 property and you would have £20,000 of rent coming in. So your pension scheme at the end of 10 years would now be worth at least £400,000. And as I said, that's assuming no growth in the value of the property, all tax-free growth. That is an extremely healthy position to put the company directors in. As you can imagine, they snapped our hands off to do this. Second example, again, chartered accountants realised that their clients had a commercial property held on the balance sheet, but they had a loan on that property to the bank, to which they'd used to originally help purchase the property for them. The company was doing well and making good profits. The accountant was obviously keen to help the directors reduce the taxable profits in the company to control corporation tax, but also again realizing that the directors needed to put more aside for their retirement and build up their retirement funds, which was obviously the core reason for doing this. Again, we set up the SSAS for them, talked them through it. The lucky thing was we managed to put in again £200,000 worth of pension contributions, but one of the members also transferred in an existing pension which was worth around £100,000. So by the time we'd put the contributions in and got the transfer in, we now had £300,000 of value sat in the SSAS. Once that was all in place, again, we arranged a valuation on the property, arranged for a solicitor to carry out the conveyance, and obviously as part of their conveyance, they obtained from the bank the settlement figures on the loan. The SSAS arranged to purchase the property off the company, and in the process settled the bank debt. The property came across effectively with no debt on it, which is very handy. This obviously clearly saved the company paying dead money to the bank in high interest costs and having to pay the capital repayments out of taxable profits as well. And again, we had a lease drawn up between the company, who were the tenant, and the SSAS. So instead of paying the bank a monthly amount, they were now paying the SSAS a rent monthly amount. The rent obviously coming into the SSAS gross and for their benefit rather than lining the pockets of a bank. So you can imagine the clients were extremely happy that not only had they got some tax relief on the contributions that they'd made to the SSAS, the cash that had gone into the SSAS effectively partly came back to them when the property was bought, and they now have tremendous tax deductibility going forward. And again, you have an asset growing tax-free inside a SSAS, thereby securing their future going forward.
Like and subscribe for lots more SSAS-related content. Speak to us on the number in the description below.